Hello everyone, welcome back. Today we're going to be talking about the national debt, the federal budget, and taxes. And I'm going to kind of tie it all in together for you. And I'm going to show you why the federal budget finance system is completely broken and not fixable. Okay, and the reason why it's important is when politicians, be they Democrats or Republicans, tell you that they're going to fix it. I want you to know and understand why they are lying to you. Okay, the system is just mathematically not fixable at the point that it is right now. So everything you need to know is right here on this board. Okay, first we're going to look at the national debt. Okay, as of November 2019, it sits at $22 trillion. $22 trillion. Okay, so what is this $1 trillion? What does the number trillion mean? Okay. So let's fully understand what the number trillion means. If I tell you a million seconds, okay, 1 million seconds is 1 week. Okay, 1 billion seconds is 31 years. 1 trillion seconds is 31,000 years. Okay, so the number 1 trillion seconds, 31,000 years. This number does not make sense unless you're talking about molecules or stars. Okay, it does not exist when we're talking about money because that type of money just doesn't exist. So how did this number come to be? What is, how did the U.S. government come up with a debt of $22 trillion? Because the name debt implies that somehow they borrowed it from somebody, and that's impossible because that number doesn't exist. Okay, let's first look at the federal budget. Okay, so on average, okay, and these are rounded numbers, the federal revenue is $3 trillion. So that's basically money that comes in through taxes, okay? Corporate taxes, individual taxes, Social Security taxes. So the federal government collects $3 trillion in revenue, okay? And then their expenses are $4 trillion. So the federal government pays out $4 trillion. So because the government's paying out more than they're taking in, okay, they have a deficit of $1 trillion. So every year this number goes up by $1 trillion, and it's been doing so. So where does the government go to get this $1 trillion? Because here this $3 trillion that came from taxes. Okay, so now they're short by $1 trillion here. Who are they going to go to borrow $1 trillion? Because this number doesn't exist. Well, what they do is they basically make up the number. Okay, the way they make up the number is basically they give themselves an IOU. Okay, so they issue a note, a government note or a bond for $1 trillion, right, at the end of the year. So they increase this number here by $1 trillion, and then they electronically print $1 trillion for them to use as they see fit. Okay, so that's how money is created. Okay, that's how the government makes the money that they use. They basically make it up. Right? They create it, so in reality, this $22 trillion is a balancing number. Okay, it's basically, it shows how much money the government has electronically printed, since the creation of the Federal Reserve. Okay, so that's what this number means. It's not a real number. It's a balancing number. It shows the amount of inflation that exists in our economy. It's the reason why the stock market is up at 27,000. These are inflated numbers. Okay, because what's happening here is every time the government prints out another $1 trillion, what they're really doing is they're taxing you because they're diluting the value of their money. Because anytime the government prints money and they dilute the purchasing power of your money, they're in effect taxing you. So this is an additional tax. So there's a lot of times the government will say that, we're borrowing from future generations. That's bullshit. They're borrowing from you right now. They're not borrowing from you. They're taxing you. It's a current tax on you immediately. If you think about it, if the government was not printing more money all the time, the value of your money would actually be appreciating in value, right? Because if you keep the money supply the same, and then more people, as people become, more people are born and the population increases, the value of your money should actually be increasing, not decreasing. So the problem here is that the government is printing money at a faster and faster pace, and that's reflected in this national debt. Okay, so now let's break this down further. Okay, and let's look at the expenses, because basically a lot of people will look at this and say, okay, so you're spending $4 trillion when you're only bringing $3 trillion in. So clearly you need to reduce this line. Okay, so the federal government has a spending problem. Basically we need to cut this back to about something like $2 trillion. Okay, that would make sense. All right. So then you would have you would have a surplus of $1 trillion. You could start paying that down. But here's the problem with this: that this $4 trillion, okay, 60% of that is Social Security and Medicare. Okay. And that basically that's a commitment, because people have been paying into Social Security and Medicare for at this point for all of our lives. So people are now collecting on that, and it's very hard for the government to tell people that we're no longer going to be paying you. Okay, so that's the problem, and that's 60% of the money that they're paying out. Now, it would have been basically the Social Security Act is something that should have never been passed. Okay, it's unconstitutional. There were, a lot of people called it unconstitutional when it was passed. At this point in the game, okay, at this point, the point where everybody has been paying into it for all their lives, nobody is going to want to basically not collect on the money they've been paying in. So you will not even get even Republicans to come out and say that they want to get rid of Social Security, because basically they're not going to get elected because people have been paying into it all their lives. I mean, at this point, in 15 years, I'll qualify for Social Security, and you know what? To hell with the government. I want that money. Okay, so that's the position that most people are going to take. So 60% of these expenditures are Social Security and Medicare. 15% of this is national defense. Okay, which is actually a pretty small number. 15% of your total expenditures, national defense. A big part of the reason why the federal government was set up is to provide for the common defense. If this was close to 100%, if national defense was close to 100% of federal expenditures, I mean, I can kind of justify it, since that's the reason why the federal government was set up. But in fact, it's a really small percentage of the total expenditures. Okay. So that's the case. You got 60% Social Security, Medicare. You got 15% national defense, and then you got another 25%, which is basically all your alphabet soup agencies. Okay, your CIA, NSA, FBI, ATF, IRS, all these agencies. That's the other 25% of this, and you know that the bureaucrats are not going to allow themselves to be put out of business, because they are practically a class unto themselves. So that's how we are at $4 trillion. Okay, and so it's really hard to reduce this number for the reasons I just explained to you. So fine, let's look at the top number. Okay, maybe we can increase this number over here. So so how are we going to do this? Well, first of all, like I said earlier, this $3 trillion represents taxes that the government has been collecting. Okay. So how can we increase that? Well, a lot of people will say, tax the billionaires. Okay. So here's the thing. Let's look at the billionaires on this line right here. Currently in the United States, there's about 2,200 billionaires. Their net worth is about $9 trillion. So if you take all billionaires, add them together, you get $9 trillion. If you were to tax these guys 100%, okay, all right, and then use this money to every year, let's say you put this money into a reserve, all right, so this now becomes a reserve. You've taxed these guys 100%, take all their money, and every year we're going to take $1 trillion from here and add it to this $3 trillion, so that becomes a zero. Okay, so basically we're going to get 9 years out of this. Okay, so for 9 years we're going to have a balanced budget. Okay, and in the 10th year, we're back to where we started out from, because you're going to run out of, basically in the 10th year you will have killed your cash cow over here. Okay, and in the 10th year, assuming that your expenses don't go up, you're back to $3 trillion coming in, $4 trillion going out. You're back to $1 trillion of annual debt, which is going to start increasing this number again. So you're going back to this need to continue to print up another $1 trillion every year. Okay, and this $1 trillion is about 4.5% of that number over here. So you're increasing it at a pretty good rate. Okay, so fine. So we can't do the billionaires. Well, first of all, here's the thing to understand with the billionaires. If you were to try and put a 100% tax on these guys, right, or even if it was a 50% tax, okay, what would happen is that because remember, all of their value is really in the stock market. Okay, these guys own corporations, that generate the business, and the stock market, right? The Dow right now is at like 27,000. Okay, the reason why the stock market's at 27,000 is because of this number up here, which has been causing inflation. So the stock market being so high is an inflationary number. If because remember, these guys don't have like bars of gold or food or anything that's actually worth anything. All they have is shares. Okay, that's where the $9 trillion come from. If you were to try and take that from them and dump it back into the market and try to sell it, I mean, the stock market's just going to immediately crash the next day. So you're not going to get $9 trillion out of these guys. The only thing that you're going to get out of these guys is basically whatever real estate they have, actual real assets, whatever house they actually live in. That's the only thing you're going to get out of these guys when you crash the market. And then what's going to happen is when you take their houses or their land or whatever they have and throw that into the market, right? Now you're going to crash the real estate market. So, out of this $9 trillion, you'd be lucky if you were able to get a couple of hundred million out of these guys if you try to tax the shit out of these guys. Okay, so you can't do that. So how about the corporations? Let's look at it. Now, when I say corporations, I mean businesses, okay? Because for example, like I own 3 corporations. They're not obviously it's not a huge multinational corporation. It's my personal business. I have it incorporated because I get the protections of a corporation. Okay, it's very typical for a deli to be incorporated, or even a taxi company to be incorporated, the gas stations, a corporation. In fact, in case you guys don't know by now, I'm an accountant, so I've done tax returns for hairstylists working out of their homes, who have corporations, and basically they set it up for the purposes of getting a protection in case they burn somebody's hair off. They can't be sued personally. They have the protection of the corporation. Okay, so most businesses in the United States function as corporations. So if you take all the businesses, right, and add them up, add the profits. We're adding the profits now. How much profit these corporations make? The total, and the year I looked at was 2018, because 2019 is not available yet. So in 2018, all the profits of all the corporations, including mine, is $8 trillion. Okay, $8 trillion. Okay, and this includes these guys over here, because these guys, the billionaires, right? All right, they have corporations that hopefully are profitable, and that's already in this number, $8 trillion. Okay? So a lot of people say, well, tax the shit out of the corporations. Okay, well, here's the thing to understand, that when you look at this top number over here, this $3 trillion, that effectively came out of these corporations already. You have already taxed them. Okay, now let's look a little into that. A lot of people will say, well, most corporations don't actually pay a tax, and that's correct. For example, none of my corporations pay a tax because they're S corporations, and any profits from the corporations flow through to my personal tax return. So I am indirectly paying for the tax of my corporation. So it doesn't make a difference whether my corporation pays the tax or I pay the tax. The tax is being paid. Okay, so that's the one thing to understand with corporations that don't pay taxes. The owners pay the tax for them. Okay. The other thing to understand is that, because here's the thing: if you look at the federal revenues coming in, okay, of this $3 trillion, I think maybe 10% is from actual corporate taxes, right? Checks that the corporations send to them, right? The rest of it is primarily the Social Security tax that's collected, the payroll taxes. And the federal withholding. Okay, so the income tax of individuals that work for the corporation. So you're going to look at this and you might say, well, it's not the corporations that are paying the tax. It's the people that work for the corporations, right? And I'm going to explain to you why the corporation is actually the one that's paying the tax. Okay, and I'll explain it this way. In the many years that I have been an accountant, and I have sat in many different meetings, okay, where people where salaries were being negotiated, a very common type of situation is for to be, to be having a salary discussion, and for somebody to say, I will accept either $80,000, on the books, or $50,000 cash off the books. Okay, so either way, the employee knows that they're going to be collecting $50,000. Okay, it's just in one case they're getting $80,000, and $30,000 of that is being paid in taxes over here. Okay, or they'll say, you know what, I don't care if the government gets its tax money or not. I just want my $50,000. So I'm very happy if you pay me the same amount of money that I'd be getting anyway under the table, and I'll just take my $50,000 and I'll be happy. So the point is that when you look at payroll taxes, when you look at withholding taxes, okay, it's not that the employee is actually getting less money. It's that the salaries have been marked up, okay, so that the corporation is paying all of the, all of the payroll taxes. Okay, so that's the reality. So in reality, almost 100% of this federal revenue, okay, comes from corporate profits. So that's the thing to understand. All right, so again, now let's go back to what we wanted to look at earlier. So I've already established that this $3 trillion comes mostly out of this $8 trillion over here. So let's take a look at this now. Before taxes, this $8 trillion was $11 trillion. Okay, because if you take, let's say before the government got its $3 trillion, you take this, you add it here, you get $11 trillion. Right. So this is an effective tax rate of 27%. Okay, so it's a 27% tax on $11 trillion. So you're already taxing the corporations 27%. Rather than businesses. When I say corporations, businesses at this point, it's interchangeable. The idea of the corporation is just really a legal shell. Okay, so you already got a 27% tax on corporations to yield this $3 trillion, and you've got yourself a deficit of $1 trillion. So now, if I want to increase this by $1 trillion, right? If I want to increase my federal revenues from $3 to $4 trillion, I have to increase my tax rate on these corporations to about 38%. Okay, so I gotta go from 27% tax to 38% tax on businesses. Okay, and that is all that's going to do is going to balance this budget out to a zero. You still have this 22%, this 22 trillion national debt. If I actually want to start digging into this, okay, I have to increase the tax on businesses to about 50%. So at 50%, the federal revenue will go up to about five, okay, and now you're actually making a profit of $1 trillion, and then over the course of 22 years, because now you have a surplus of $1 trillion. So over every year you have a surplus of $1 trillion, and then you can pay this number down by $1 trillion every year. And now mind you, there's interest and stuff that's accumulating. So basically, it would take you about 25 years to basically get rid of the national debt. Okay, so that's what it would take. It would take a 50% profit on businesses, and there's a big problem with that. Okay, and I kind of hinted at it earlier when I said that people really don't mind how they get paid as long as they get paid, and they really don't mind cutting out the federal government. As you increase the tax rates, as you increase taxes more and more, you give people and businesses more and more of an incentive to try and beat the system, which is exactly what they're going to do. Okay, so people are going to find ways to work around the system. They'll change jobs. They'll change the way they run their businesses. They'll change the type of businesses that they do and how they do them. So they will end up beating the system. The other thing to understand is that, when you're taxing businesses 50%, okay, and basically you're taking, 50% tax. Well, what if we, let's say, increase it to 100%, right? Let's say you have a 100% tax rate. You're taking everything from somebody, somebody's working, you're taking everything from them, 100% tax rate. That comes pretty close to the idea of slavery or serfdom. Okay, so if let's say you're working and I'm taking from you 100% of the fruits of your labor, okay, that's pretty close to slavery. Okay, Well, how about if I'm only taking 90% from you? Okay, I'm giving you just enough to live on. Okay, and I'm taking 90% of the fruits of your labor. Again, that's pretty close to slavery. Okay, so at what point does it stop being slavery? Okay, when you're taking from people through force, right? Because taxation is force. Okay, you don't have a choice. Taxation is they are pretty much taking from you whatever they want to take from you. So when you're taxing people at 50%, and you're taxing businesses at 50%, that's pretty. If it's not slavery, it's definitely going in that direction. So going back to my original point, you guys can see right here on this board why our current national budget, slash national financing system is not fixable. You can't fix it. There's no way to fix it without completely tearing down the system, throwing it out, and starting it new. And doing so would probably be dangerous, because in doing so, you don't know what the consequences are going to be. Okay, the thing that politicians don't want to say is that realistically the safest thing to do is to keep things exactly the way they are and keep growing this national debt by $1 trillion every year, because it provides it provides stability. Okay, and that's one of the things that business needs. Businesses and economies, they need stability, and that's the reason why you don't see too much effort to change any of this. So even though all the politicians know that this system is not fixable, okay, they all know that this is not fixable. They all know that you're never going to be able to generate enough tax revenue to be able to turn this around. They're going to stay with this system because it's still a stable system. Okay, so that's the truth. That's the reality. I'm really not here to give you guys any alternatives or any solutions, but I'm here just to make sure that you all understand the numbers are very simple. Okay, that's why I put T's here instead of putting out all the zeros, because when you put lots of zeros and decimal points, it looks somewhat intimidating. But when you put the T's, or better yet, just cover these things up. Okay, just look at the numbers. Look at it from this position. Let's say that you have a credit card, right, and you've got $22,000 of debt on your credit card. Okay, your annual income is $3,000. Your annual expenses, which you're putting on this credit card, are $4,000. Obviously, your credit card debt is going to go up by $1,000 every year. And now you are in a situation that you can't get out of, okay? And people are, on a personal level, get into this type of situation all the time. Now, if you get into a situation where your expenses are more than if your fixed expenses are more than the income that you are making, you're not going to dig yourself out of this hole, okay? And that's exactly where the government is, and that's exactly where you would be in their situation. It's just not fixable, and they're the facts. You can't tax these people here because you're already taxing the shit out of them. All right? So if you guys like this video, give it a thumbs up, share it. If you're not a member of my channel, subscribe. I'll see you guys soon.